Well, hey, as we tune in, as you can see on the screen, I'm going to try something new. This is a new type of vlog that I haven't really tried in the past, and just to kind of reflect what I've been up to lately, and that's, of course, studying the markets and doing a little bit of trading, and it's a lot of really studying. It's not necessarily, I would say, a side hustle or a job yet. It'd be nice to get to that point, but I really enjoy economics, and so the topic today, as you can see on the screen, this is the talk of the town, and it's the sign of the times right now, is surging prices. In this case, we're talking about silver, precious metals in general. As you can see, like just in the last, we're at record prices right now. It shot up here. We're at $112 on the spot market. And of course, there's everybody and their mom and their grandfather is an expert now. I'm not trying to be an expert here about silver, or this is not a video about making predictions or what to do. But if you haven't been following, if you've been living under a rock, what's going on here, there's many reasons being cited for why precious metals, in particular silver, is spiking right now. Some of those arguments include geopolitics, the continued sustained tensions with the U.S., Israel, Ukraine, Russia, China, all of that stuff is related to this current surge, as well as the so-called monetary reset. Everything's being tokenized, and we're moving to digital money more and more, and so that's why a lot of people are hedging on precious metals like gold and silver. And a third argument that you'll hear a lot about, particularly that affects why silver is taking center stage, is due to unprecedented surging industrial demand. Okay, so this is the argument that I'm going to focus on today. And there's some truth in all of these arguments, including this latest argument that because silver is a fundamental input or resource in everything from solar panel production and manufacturing to electronic components, specifically EVs, electric vehicles, and as we even heard, there's new types of battery technology. I believe Samsung has been cited for a new type of battery that has a very impressive range, but it requires a lot of silver. This is just one example of a use case of silver. So this third argument, I think, is a dangerous, fallacious argument that many people, by itself, people arguing that because there's a surging industrial demand, that means silver is going to continue to rise to the moon, and it's going to go to $200 per ounce, $300, $400, $500. It's never going to stop going up because there's more demand for silver to support AI centers, to support solar panel production, to support the war machine. I think this argument by itself is very fallacious and potentially dangerous for people who are stacking and collecting, investing just for that purpose, because they believe that because there's industrial demand, that the price is only going to go up. And so what I want to focus on with this argument is that's not necessarily the case in the capitalist system, right? In the industrial system that we are part of here, that usually when any particular industry wants to maintain its profitability, or it wants to continue to be profitable, that it needs to control its inputs, right? It has a vested interest for its key inputs to be low. And these guys are powerful tycoons. They're lobbyists. They're advocates for with the government in order to control prices and ensure that their inputs can be controlled to ensure that their margins remain high, that they can continue to be profitable, right? So this has been the case, and we have many examples of this. Today I'm going to focus and share with you two examples to make my point here. Speaking of automobiles, right? Another key input that we can look at is rubber, natural rubber, right? Here's a little pie chart to show that most of the natural rubber that is produced and cultivated is to support the production and manufacture of tires, right? And tires are a key input of the automobile manufacturing. And so if we look at futures rubber market in Japan as an example, this graph, what you see here, it goes from 2008 to 2026, and here this blue line is the futures rubber in Japan. So everything is based on Japanese yen here to cubic kilograms, and this green line is the Japanese. I'll just show you exactly what it is. It is the Japan Automobiles and Parts Index as gauged through NASDAQ here. And you can see this relationship. And just want to be clear here, I'm not arguing that that basically the basic principles is correlation does not equal causation. So I'm not trying to paint any causation relationship here. I'm just trying to highlight a few inverse relationships that demonstrate the point that it's in industry's interest to have low inputs, that low input costs do correlate with high profitability. So we can see that in this. So as going back to 2013 here, as the profitability of the Japan Automobile and Parts Index rises, at the same time that the profitability of the futures rubber, basically the rubber's index price falls, right? So it's in their best interest. I'm not, again, correlation doesn't equal causation. That's not what we're talking about. And at the same time, as you can see here, when demand for that rubber starts to increase, most likely due to increased demand in the automobile industry, there is cases where the price will spike up as a result here, but it's not sustained forever, right? As you can see, as the price of rubber increases, you don't see the index for automobiles rises at the same time. However, as we see here, as the profitability spikes again here in the automobile index, we see the price of futures for rubber drop. So you can see this time and time again. There is some tracking of the index here as we go over here. Like I said, once I'm not trying to do that. Yeah. So you can that looks a little bit better there. And we're starting to see that again here. The most latest since February, since mid-2025, the profitability of the Japan Automobiles and Parts Index rising. At minimum here, the futures rubber price is stable. It's not rising. And it could arguably, based on these trends in the past, could even start falling as the profitability of the automobile industry rises, right? Another example is crude oil. So we're going to go to the crude oil here. We're going to go to this graph here. We see a lot of the same inverse relationship, right? We all love low gasoline, low fuel prices. It's in the automobile industry's interest to have low inputs. That's our point, right? And one of the key inputs of the automobile industry, other than rubber, of course, is crude oil, right? We need crude oil to make our fuel. Crude oil also is the basis of petroleum products, which we use in the automobile industry, from body panels, fenders, etc., right? So we can see some of this relationship shown here as well. A lot of it here is tracking. There's nothing very obvious right here. So this, so again, the crude oil line here is the light crude oil futures index, and then the red line is again the same Japan Automobiles and Parts Index right here. So as crude oil drops here, there's no clear relationship. The profitability remains stable here, right? And on the contrary, as the price of crude oil spikes here, what spiked here in 2021 going into 2022 during COVID times here, that we can see the profitability of the Japan Automobiles and Parts Index is dropping. And then likewise, as it recovers, the automobile profitability, automobile and parts index rises, the profitability rises at the same time that the crude oil index drops. So there is a relationship there. So point being, it is a known fact in industry that in order to be profitability, you need to have good margins that are related directly to your inputs. So the argument that because there's strong industrial demand for silver that it's just going to spike to the moon nonstop, uncontrolled, is fallacious and it's dangerous. But again, I'm not here to say that the price of silver is going to crash or it's going to continue to go up or not. I'm like any of you out there. I don't have a crystal ball, but I am interested in the dynamics and economics. And I just wanted to make that point because you got a lot of hype around the market right now, including this guy. Everyone's seen this guy. It's not a guy at all. It's AI. It's an avatar. It's a creation. Who knows who's behind? Actually, this could be some fat guy like me, some dark corner in a basement. But yeah, let's just hear what it ever has to say, just in case you aren't in the hype there.
At the corporate level, silver at these levels is not a fun headline for a lot of industries. The solar manufacturing chain is a big one. Silver is used in photovoltaic cells. Even when manufacturers reduce silver content per panel, scale eats those savings. When silver jumps, costs jump. And when costs jump, margins get squeezed unless demand is so hot they can pass it on. So if you're running a solar factory and you see silver behaving like this, you don't sit around saying, we'll buy it later when it dips. You start making phone calls. You start pulling forward purchases.
Okay, I'm not going to play the whole thing, but yeah, I mean, this algorithm, this digital creation or whatever that represents some Asian guy, there's a lot of, facts in there. It's true that there will be, when demand is squeezed, that is one of the reasons that the price is going up. But I guess from the manufacturer and the industry side, there's only so many things that can happen, right? If one of your key inputs, the price is rising, and you can't control it, you can't manipulate the markets, you can't advocate through governments to control the prices to bring it back down. What's going to happen, right? Basically, that's what we're talking about with silver, right? If the price continues to rise, you have two things. You can let it cut into your margins, and you can pass on those increased overheads to your consumers and customers. But what does that do? If all of a sudden these products, these solar panels, these electric cars just become too unobtainable, and we've seen this in the past, right? If they become too unobtainable for your market, then there's less demand and there's less profit as a result. So that's not what they're likely to do, right? You can go out of business and just stop demand altogether, and that's definitely not going to happen. Or what usually happens in industry, if one of your inputs becomes too expensive, what's the next logical thing you do? You invest in R&D. You find alternatives. You find more efficient ways to use your inputs, silver, so you can use less of it if it's too expensive, right? That's what's going to happen, essentially, right? But the idea is that they're going to just continue to buy expensive silver and just watch it race away. I think that's fallacious. We'll see where the price goes. It could go to 200, 300, 400, 500, but at the end of the day, there's got to be some cap on it. It's going to have to fall back, or habits of industry are going to change generally, right? They're not going to use as much silver, or they're going to use it more efficiently. But like I said, I'm in it with all of you. I don't have a crystal ball, but I'm definitely interested in this topic, and I'll continue to observe the markets, and when I get inspired to share my insights on some of these things, I will do so. And you can rest assured I'm not an AI. I'm the real thing right here. Can't you tell? But anyway, until next time, we'll see you again next. Later.